Welcome to the Gamma Brief. It is Friday, July 31st, 6:45 a.m. Eastern. For anyone new here, the Gamma Brief is an experiment. The brief is built using a layered generative AI pipeline to capture market data, economic events, and structural mechanics, and then turn all of that into accurate, actionable briefings every morning. The brief is built on a single dataset, the SPX 0DTE options chain. All the gamma levels, dealer positioning data, put and call walls, and the GEX flip point are calculated from that chain only. As a friendly reminder, Gamma Brief is market intelligence, not financial advice. And if you like what you hear, smash that like button and subscribe. Every sub to the channel helps. All right, let's get started. ES futures are trading at 7,504. We are entering our second straight week of dealers amplifying every directional tick. Yesterday, we issued a caution signal for high volatility based on the structural setup, and the session, driven by a hawkish rates backdrop, expanded exactly as projected down to 7,316 before reversing. If the overnight gap holds, the upper expected move becomes the immediate ceiling. If it fades, the floor reprices violently lower. The structural environment remains locked in negative gamma with a net GEX magnitude of negative $3.4 billion. There is no flip within the observable chain. Dealers are uniformly short options, forced to chase price by buying into the rallies and selling into the dips. While VIX is declining at 16.78, this simply reflects current options pricing, not a cap on realized volatility. The regime reads with elevated uncertainty due to structural factors like the massive gap size and prior session data conditions, not because of missing morning catalysts. The geometry is severely stretched. The expected move band spans from 7,359 to 7,516. The dealer gamma resistance has failed before the bell. ES futures at 7,504 have already breached the 7,500 call wall. If the gap holds, the buffer to the put wall support at 7,400 is a massive 104 points. If it fades, that floor reprices rapidly to 38 points. With R1 at 7,488 cleared, the next active resistance sits at R2 at 7,538. The tape is being driven by a broad risk-on global tech impulse. Korean semiconductor equities surged overnight, lifting NASDAQ and broad index futures into the open. Domestically, the June Core PCE print dropped at 3.3%, providing the macroeconomic relief valve for equities. Cross-asset confirmation is present, with technology gaining 2.3%, while real estate lags, signaling targeted rotational demand rather than broad market momentum. On the risk radar, we have the Employment Cost Index at 8:30 a.m. Eastern, followed by Chicago PMI at 9:45 and Michigan inflation expectations at 10. Calendar risk is moderate at 3 out of 5. The asymmetric risk today lies in the data. A severe shock would force rapid dealer re-hedging into the already extended negative gamma structure. The environment supports defined risk directional setups aligned with the primary trend. Income here is a picnic on the train tracks, and the schedule says the train is coming. A breakdown below 7,400 invalidates the bullish gap and opens the trapdoor toward 7,351. Dealers are offsides with ES already trading beyond the call wall. The primary threat today is an exhaustion of the tech-led overnight momentum that forces a rapid gap fill. 7 days, one regime. The longer it holds, the harder it breaks. Levels set, bias defined. Good luck out there. Standard disclaimer remains. Gamma Brief and GEX log are market intelligence, not financial advice. Options are high risk, manage your size, and trade your own plan.